Hey everyone, welcome back to Corporate Decoder, where we uncover the real stories behind the numbers, and today we're diving into an amendment to a company's filing. It is not a brand new report, but an update to a previous one, which usually means they're correcting a small detail. We'll decode what that means and if there is anything more to it. Before we dive in, if you like getting straight down to business with no fluff, make sure you are subscribed. And if you want to connect with us and other finance enthusiasts, join our Discord community, linked in the description below. So this is an amendment to a Form 8. Now an 8K is like a company's immediate bulletin board for investors reporting big news. An amendment means that bulletin had a typo or something that needed to be fixed. We're talking about Seritage Growth Properties, also known by its stock ticker SRG on the New York Stock Exchange. They also have preferred shares trading under SRG Pay. This filing is straightforward. It is an amendment to correct a small mistake in a previous report from the 4th of December 2025. The company states they are filing this amendment solely to fix a typo in an exhibit, Exhibit 99.1, to make it match the actual press release that was issued. So, the core information in the original report remains the same. We're not going into the nitty-gritty of every legal formality here, but we are going to look at the actual business update that this amendment is connected to, which happened on the 4th of December 2025. This is the key piece of news. Seritage Growth Properties, or SRG, made a voluntary prepayment of $20 million on their senior secured term loan facility. Think of this loan as a big loan the company took out. A significant chunk of it was $1.6 billion. Now, they've decided to pay back an extra $20 million of that debt. Now let's look at the details of the loan. It was originally dated back to the 31st of July 2018 and has gone through several amendments, which is common for long-term loans. The lenders include Berkshire Hathaway Life Insurance Company of Nebraska. This next sentence is really important for understanding the company's financial health. When you put this $20 million prepayment together with previous payments since December 2021, they have now paid back a massive $1.55 billion of their loan. This means that out of the original $1.6 billion, only a tiny amount, just $50 million, is still outstanding. This is a huge accomplishment for the company. It shows they are serious about reducing their debt. Paying down debt significantly reduces risk for investors. It means less interest payments and more financial flexibility. And here is the direct financial benefit. This $20 million payment will save Seritage Growth Properties about $1.4 million in interest payments each year. That might not sound like a colossal amount for a company of this size, but every dollar saved on interest is a dollar that can go back into the business, be reinvested, or distributed to shareholders. It's a clear positive impact from their debt reduction strategy. Now, let's look at the exhibits attached to this filing. Exhibit 99.1 is the press release, which we've just discussed the key points of. This is the document that contained the typo that necessitated this amendment. It is basically confirming the details of the $20 million prepayment. And Exhibit 104 typically refers to the interactive data that regulators use for easier analysis. So putting it all together, Seritage Growth Properties is doing a commendable job of aggressively paying down its debt. They've almost completely eliminated a major $1.6 billion loan, leaving only a small portion outstanding. This significantly strengthens their financial position and saves them millions in interest payments annually. The amendment itself is just a minor administrative correction, not indicating any new or concerning information. Looking at this from a broader perspective, Seritage Growth Properties, often involved in real estate, especially retail properties, has been navigating a challenging market. Companies in this sector have faced headwinds from changing consumer habits and the rise of e-commerce. Their strategy of aggressively retiring debt suggests a focus on de-risking the business and improving its core financial health. This is a smart move, especially if they anticipate continued market uncertainty or need flexibility for future investments or opportunities. The main strength here is unequivocally their debt reduction. They have taken a very large debt burden and shrunk it down to almost nothing. This demonstrates strong financial management and a clear commitment to becoming a more stable company. The opportunity for them is that with this reduced debt load, they have more freedom to operate, invest in their properties, or perhaps acquire new assets without being overly constrained by debt servicing. A notable risk for any company in this sector, especially those with significant real estate holdings, is the ongoing evolution of the retail landscape. While they've managed their debt well, ensuring their property portfolio remains relevant and profitable in the long term is crucial. Diversification or strategic repositioning of underperforming assets would be key here. In conclusion, Seritage Growth Properties is making excellent progress on its financial fundamentals by tackling its debt head. On this filing, despite being an amendment, highlights a positive financial move. They are becoming a leaner, less risky company. The focus is now on leveraging this improved financial footing to navigate the dynamic real estate and retail markets effectively. Alright, that is our quick decode of this SK amendment. What is your take on Seritage Growth Properties' debt reduction strategy? Do you think they're in a good position to thrive? Drop your thoughts in the comments below, and if you found this breakdown helpful, please hit that like button and subscribe for more corporate insights. Don't forget to join our Discord community for more good stuff. Thanks for watching, and we'll see you in the next video.